Hello and good morning, ladies and gentlemen. You're with Martin Panev, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European Session Market Outlook. Starting as usual with the North American markets coverage. Yesterday, not much of a movement on the Dow Industrial Index or the high-tech NASDAQ. There was a slight down move on the Dixie Index, just a very insignificant one. Initial jobless claims, 4,000 better than expected yesterday. Durable goods orders, excluding transportation, also better than expectations. And market services PMI worse than expected. The composite one came out lower than the previous report. The dollar moved slightly lower against the euro yesterday as traders awaited highly anticipated speech by Miss Yellen, which is due today. We are looking at Kansas City Fed President Esther George, which said of interest rates, when I look at where we are within the job market, when I look at inflation and our forecast for that, I think it's time to move. George is also voting member this year of the Fed's rate setting committee. At the central bank's July policy meeting, she cast the lone descending vote calling for the Fed to raise interest rates once again. In the agenda for today, of course, the second day of the Jackson Hole Symposium, and also we are expecting the Janet Yellen speech later on today. We also have the gross domestic product annualized for the second quarter. Goods trade balance, prices and core prices paid quarterly and quarter. Next week, by the end of the week, the ISM manufacturing PMI and prices paid reports. Also on Friday, non-farm payrolls unemployment rate for the United States of America. Moving to the Euro markets, yesterday both DAX and CAC 40 went down. French INSEE manufacturing confidence report came out 101 points versus 103 expected. The Swiss industrial production year on year minus 1.2% versus 1% positive previously. The German reports also came out on a negative note. Basically, these are all reports which came out and hurted the euro. The French and German business sentiment weakens. The French manufacturing confidence index fell from 103 to 101 during July. Meanwhile, IFO reported that Germany's business climate index, current conditions, and business expectation indexes for July all took hits and pointed in negative numbers. In today's report on the consumer confidence survey, the number finally looks a little bit more positive. Green numbers I saw in the agenda. The squeeze on European equities allowed the euro to easily trump all its Forex rivals during the morning London session yesterday, even the safe haven currencies yesterday. Also, the central bank, the ECB, has come up with the private loans and money supply reports. All came as expected earlier today. For next week, we are looking at retail sales, unemployment, CPI numbers and market manufacturing reports for Germany, Switzerland, the Eurozone in total. Basically, those would be the events our traders should pay attention to. UK markets, yesterday the FTSE 100 was almost 20 points down. It closed at 68.06. CBI Distributive Trade Survey realized month-on-month report 14 points better than the expectations at 9. For today, we are looking at the gross domestic product quarter-on-quarter, year-on-year. Also, we have total business investment quarter-on-quarter and year-on-year, and also the index of services. Moving to the Asian markets, yesterday the Nikkei 225 went 70 points down. It is continuing the downtrend, almost 150 points down already today. Yesterday, CPI numbers came out all negative, year-on-year, month-on-month for the month of July, of course. The national CPI came as forecasted and as previous. Pretty much the numbers came out on red. This, of course, pushed the investors and the traders to be quite cautious within their actions. For the month of August, also we had a few CPI reports there, also came out on the red. So basically, shares in Asia drifted lower yesterday as people largely held fire ahead of guidance from the U.S. Federal Reserve Chairwoman, Ms. Yellen. The Japanese consumer prices continued to fall in July and August, suggesting that the Bank of Japan may have to act again in a bit of to spark inflation in the world's third largest economy. The core consumer price index, which excludes fresh food, slid by 0.5% on year in July, following a revised 0.4% drop in June. That was worse than 0.4% falling forecasted by the Wall Street Journal and the Nikkei. Electricity and gasoline were among the items falling in price, weighing on the index. The Bank of Japan Governor, Mr. Kuroda, has blamed the falls in prices on weaknesses in global energy prices since the year 2014, and has said the overall price trend is steadily improving. For next week, we're looking at employment data, also overall household spending and retail trade reports. On Wednesday, industrial production, this would be for the month of July, preliminary data. Also for the Aussie, new home sales month on month for July. On Thursday, foreign investment in Japan stocks. A couple of reports from China, non-manufacturing PMI, NBS manufacturing PMI as well, and also Caixin manufacturing PMI for the month of August. We also are going to look for the retail sales reports from the land down under. This was pretty much all for me for today. Thank you very much for your attention. I wish you a successful trading day. Cheers. Bye-bye.